Hello and welcome to FX Street Currency in Play in conjunction with GKFX, coming to you live from Core Finance in London. And I'm joined today by James Hughes from GKFX, who is a Chief Market Analyst there. How are you today, James?
Very good, thank you very much. Very good, thanks for having me on.
Absolute pleasure. Well, let's have a quick look at the trends today, starting off, dollar index slightly weaker, although it has bounced a little bit this morning. All about Trump, US politics and the FOMC. Really kind of transitionary but dovish minutes last night.
Yeah, and of course it was a case of, are they going to focus on tapering the balance sheet reduction, or is it going to be the inflation that they focus on? It was one of the two we were going to see. It almost feels like they're ready for September with the balance sheet reduction, so let's focus on this inflation being too low. And I think it's almost a case of saying, well, the balance sheet reduction is what we want at the moment, rather than another interest rate hike in December. So I think it's a bit of a mixed bag in that, but that inflation worry is obviously key for them at the moment, and the balance sheet stuff is going under the radar and is almost a bit of a given at the moment.
And it's hard to be dollar positive on the back of Trump and dovish statements, really.
Yeah, and the problem with the US at the moment is that the White House. The problem with the US at the moment is that Donald Trump's in the White House, and I'm not necessarily talking about his politics. It's just the fact that Donald Trump gives us that air of just uncertainty around what's going on. Yes, equity markets can rally and have been ever since the 9th of November, but dollar index and the dollar is just struggling, and they're both the complete inverse at the moment.
And move on to obviously euro dollar. Making up the euro a big part of the dollar index anyway. Below 118. We've had some CPI data in this morning. All pretty much looks in line, so nothing really to move it there. But it feels more kind of a dollar is dominating this currency pair at the moment. Yeah,
exactly. And of course, I mean, you look at the strength in it. It's been the pair itself has been so strong, and it's likely to continue that. I know we've had that little bit of dollar strength coming in maybe in the last week or so, up until kind of yesterday. So there is that feeling that there is almost probably buying opportunities as that drops off, and it's strange, isn't it? Because you can sit there and say, well, are we in a situation where everything's easy? Buy the equities, sell the dollar, and life's easy. Just sit back and watch it roll in. But at the moment, you just never know what's going to come. There is that undertone of something could happen to spike things out of the way. And plus, Euro side, the ECB's got its own problems in itself. So is it going to taper or is it not? So it's a little bit. It looks clear cut, but of course, as always, it's not particularly.
Very much so. Cable as well, trading again around the 129. We had some retail sales numbers, bit of a mixed bag. June slightly lower, reiterated slightly lower. July actually okay. It looked okay, hasn't really moved the currency. One thing I noticed yesterday, Bank of America Merrill Lynch indicating we could see cable down at 124 before the end of the year, maybe 110 if EU negotiations fail.
Yeah, which is likely.
That's a big call. I mean, technically at the moment, where you seeing cable? I mean, we've had a lot of technicians saying it looks like it's trending lower. What do you think?
Well, I think it broke above those highs that we didn't really expect it to, and it has had that strength. And of course, there is that US dollar story in it as well. You can't really get away with that. So I think the fact is it broke above. It's slightly different to euro dollar because euro dollar, yes, has got the ECB problems, but it hasn't got the utter car crash that is Brexit hanging over it as well. So I think what's interesting from the cable point of view is you've got the Bank of England as well. We're looking at a situation where yesterday's inflation figures came in 2.6%, or the day before, whenever it was, 2.6%, which actually staying at that level is okay. The wages this week came in slightly better than expected, yes. So that does ease the pressure, I think, a little bit. So that does help, I think, going forward, especially for the Bank of England.
For sure. Dollar yen as well, around 110. We're actually going to move on to a few of your slides that will hopefully back this up. And we're going to look, first off, at gold, and just walk us through this chart. What are we looking at here?
Yeah, I mean, this is pretty long term. It's obviously a daily chart, and you've got those key levels up at that sort of 1296 area, 1295 area, which has been acting as such a key level for such a long time. It double topped quite nicely up there. We've had a little test towards it. We haven't really broken it up. But what's key is we've broken that long term trend line on the upside there, and it has then messed about for a little while. We saw a couple of spikes around, so it just shows that it's an important level to break out because the market did go pretty erratic around it. If you look on the downside as well, we've kind of got these two levels. I'm a big advocate when it comes to technical analysis. You're either someone who follows it to the textbooks to the letter, and you're a bit of a purist, or you give the market a bit of time to breathe. And we need to let the market breathe. And I think this downside trend line, the first one, is a big sign of that, because you can see there's nice 3 touches of it. We broke aggressively. That's a big break. We broke aggressively below it, but you can see after that break, once we went back above it, it started to respect it again. So you can't just ignore situations like that. You have to say, well, that level, once it comes back in, is going to be important again. But you can see the downside area as well. It's just that breakout on the upside. You've got that shaded area that you can see there. So any break above that 1295 area goes into that key between 1296 and that 1307 level. That's the key area within there. Whether the market messes around in there and then comes off from there, that could be a situation. But of course, we've broken the long-term trend line on the upside, and then the next is at 1296.
And from a fundamental point of view, we need to look at, if North Korea rears its ugly head again, this could, we could see a breakout above that.
Absolutely, and we know sort of gold becomes that. It became particularly, it's not very fashionable to talk about gold as a safe haven, but 2017 and Donald Trump has seen the return of the safe haven trade in gold, and now with the North Korean tensions, it becomes more than ever. So you think an escalation in any of the rhetoric around that, then we see pops in this sort of stuff.
Understood. Moving on, we're looking at a currency pair, sterling yen.
Yeah.
Just talk us through that. I mean, there's a lot of moving parts to this, but it feels like quite an interesting trade for our viewers out there.
Yeah, I think so, because, I mean, dollar yen we mentioned just previously, and gold, there's a nice correlation on dollar yen and gold, and over the last few weeks and even months, that's been correlated quite nicely. The moves have been particularly strong, and the breaks, you often see a break in yen before you see it in gold, and they can kind of lead each other on. So that one's quite nice. But when you take yen with sterling, it becomes a little bit more volatile. We know that yen can be particularly volatile anyway, and with Brexit going on, UK PLC being in a bit of a mess, then we've got a situation where there's some movements. And again, we've just got, and I know it's very simple, but you've got the green 200 period moving average there, which is where the market's messing around with at the moment. It's broken out of that longer term trend line, which is a key break, you can see, but the key area is that it's messing around with that 200 period moving average around there. Now, just if we break below that a little bit more aggressively, we have broke below it in the last couple of days. This is a daily chart, so today's session is taking that lower. It does show that there is that downside move below that 200 period moving average. But if we go to the next one, which is then the hourly chart, then you can see that the range that this is then going to sit in. So it breaks, this big black line is that circle that was on it before, so you can ignore that one. But the middle through there is the break of the trend line, and then you can see the range that we've got this in. The highs up at 143.30s and the lows down at 141.21. There is that range within there. Now it's narrowing in a little bit, so it can either do one of two things. It can hit the range properly and break out either way, or it's going to narrow into a wedge, and then that's going to give us an even more concrete reaction once it breaks out of one of those two areas. And it would look like if it does take that 200 period average on the daily and closes below that today, then it shows us that we're maybe a little bit more negative, and that's turning the tide a bit. I
mean, personally, I think I'd be a seller for choice on that pair, but it's certainly a pair to look at for the viewers. And finally, looking ahead, quite a lot to look at on the economic calendar front. Key things, I think, probably we've got the ECB monetary policy meeting. It's just a behind closed doors meeting. There's no presser, etc., from Draghi. Yeah. So, but keep an eye out on that. Anything else jumping out of you on the calendar? I think obviously it's interesting looking at the Fed speak. So you've got Kaplan and Kashkari speaking later on today. It's interesting that after the Fed minutes yesterday as well, and just where they stand on that, because it's interesting to say the fact that they kind of ignored the balance sheet and inflation is important. But Kashkari has been quite key in the inflation worries, and it'd be interesting to see whether they're singing from the same hymn sheet, and that's what the divergence is, where you get the interesting parts within these meetings. So your industrial production and all obviously the job numbers always give us a little bit of a dollar move anyway. Fantastic. So I think dollar really is the key play at the moment, maybe to look at. We're going to see some moves there. Absolutely. James, thank you very much for joining us from GKFX, Chief Market Analyst for FX Street Currency in Play. Thank you very much.